Once you leave fiat into crypto, you don't go back.
I don't want to go back.
Okay.
Why would I?
Well, I don't know. You tell me. How do you think about it, right? So you've got 100% of your assets. You've said, I'm going to take 3, I'm going to put it into crypto.
Yeah.
Maybe that goes up, maybe it doesn't, whatever. But let's just say it's 3 to 5%, whatever the allocation is. Once you put that into crypto, why are you not going back into fiat?
Well, the reason I would come back out, let's say our covenant is a max on 10, which is most institutions, that is max arena.
Okay. All right. So 10 is the max allocation.
Because if you're going, you basically, if you have LPs or you have other shareholders or you have other constituents, you've told them you have a covenant of diversification and it might be 10%, whatever it is, but it's not much higher than that. So when you get to 12% at the end of a quarter in your crypto, you're going to trim back to fiat. You're going to go back to 10%, or maybe, and then you just sit in the weeds waiting for correction and you buy back up to 10%. I've been buying,
you bought the dip.
Well, it's not really a dip. It's maintaining the 3% weighting, right?
Yeah. No, but I'm saying the dip in the price.
Yeah, I know. But to me, it's okay. We're 2.4 and we said we're at 3. Buy up to 3 because we've had a correction. You can't call that's a correction we just had.
Well, I mean, look, in 2017, there was 6 over 30%, I think, right? There was 2 40% drawdown. So it doesn't feel good, right? When the asset draws down, but it's not atypical for the kind of historical bull runs, right? Which, again, if you tell in the traditional world, hey, there's going to be 2 40% drawdowns, but you're going to go up 20x in a year, they're like, I'm out.
Well,
right? They're like, I'm out of this.
but in this case, you end up with more coin after that correction. And then you're out loaning it out and you're getting and with that volatility, you just got 200 basis points more yield. People don't understand vol is good for yield. It's not good for your stomach. But it actually helps you mine yield from your crypto. And so when you understand those smart contracts and how it's being loaned out, and I'm getting way more sophisticated. So I look at it now with my team saying, okay, you could even put leverage on this if you want, which we don't. But I think that's a crazy chicken move. But you could really goose your yields.
Why are you only targeting 4.5 to 8%? Some of these can pay 20% or 30%.
What's your duration? What duration?
Well, that's what I'm asking you, right? Is it just you're saying, hey, I want to be able to earn the 4.5 to 8% forever, and the 20 to 30% is only there for a couple of weeks or a couple of months? Like, how do you think about yield versus duration?
So what we don't have is a long history of what that curve on duration look. You just don't have it. We're all pioneers in this, and because I'm a bond guy, I've been a bond guy for decades, and so what I look at is duration and quality. You can't work with that yet. We don't know. So I said, look, let's keep our contracts short. Let's understand the change in the deltas. Let's understand, how inefficient the market is when there's a lot of volatility. Let's just gather our own data. Keep our powder dry. Let's only loan out 50% of our positions until we understand how it works. And I should also disclose I'm working with some of the larger corporate DeFi guys. I've opened accounts to manage some of my company's balance sheets. I'm putting up to 5% of our fiat currency into a strategy like this on our balance sheets. I don't talk about that too much, but I'm letting you know. I'm saying, guys, we're in, let's say I have an operating company that's sitting with, $30 million in cash. Let's put $1.5 million into this strategy. We'll open an account. You'll understand how it works. You're the treasury. Let me show you how it works, how I'm doing it. Let's disclose to, if they're private, we just have to disclose to our LPs what we're doing. I haven't anybody said to me, no, I don't want that. Everybody wants to learn. So instead of making nothing on our cash, which we're basically under inflation, we're losing money on our cash, we're picking up, we're doing better than 4.5. That was a few weeks ago when coin was very stable. Now, like today, you can get 7, 8, 9, as you know. So it's not impossible. And so I think it's
why only put 5% of the company's assets? Why not do more if it's just yield? You're not taking the price risk necessarily in terms of that's the goal.
Because the compliance departments are all in that, let's tiptoe in. You know the concern. It really is a 3% now. There are some at 5. But here's the thing that everybody understands, because I live in this world. The potential is huge. You've got less than 1% of global corporations even thinking about crypto right now.
Before we continue, help us by smashing that YouTube like button and subscribe now to this channel. This shows the algorithm that you value the information, and it helps us spread this message. Sharing is caring. Please like and subscribe now. Thank you. And now let's continue.
So as time passes and they see examples of what I'm doing and others are doing, and they start to tiptoe in, you're talking about billions of dollars that are sitting on balance sheets making nothing. And so it's going to become, that's good and bad news, because the more money goes into that, the less yield you're going to be making. There's going to be a lot of competition. And so, but right now I'm tiptoeing through the tulips. almost double-digit yields. I think it comes down commensurate with the volatility. So here's the thing you got to understand. I don't want to get too complicated, but let's say when you put a lot of Bitcoin on your balance sheet, you're going to have vol. You're going to have volatility. The criticism of Tesla we've been watching. They showed on CNBC today all the balance sheets that have, crypto on it, they're all down because people think, oh, woe is me. They've got crypto. It's going to affect their balance sheet. It does, but at the same time, they're loaning it out if they're smart, and they're bringing in yield that they never used to make on their cash. So over time, when people understand this, it'll offset it.
I think people, when they hear this, are going to be very surprised to hear that you're buying the dip, you're getting into DeFi, you're earning yield, right? Those are various fairly sophisticated strategies compared to just buy Bitcoin, right? Or, hey, I want to buy a mining stock, for example. Because you're getting more and more in the weeds, right? And I feel over the last 2 years, maybe it went from, hey, I probably shouldn't talk that much about this to, okay, maybe there's something interesting to 3%. Now, hey, let's start going further and further into the weeds. Where does this go 10 years from now? If you just fast forward and you say, okay, hold on a second. There's a bunch of stuff that has to get built and get there. Eventually, is it just 100% of corporate balance sheets are, in digital assets? And so there's digital dollars, but also Bitcoin, Ether, whatever. There's yield. There's a true decentralized financial system that gets built here kind of right out underneath of Wall Street? Or is there coexistence? Or just where are we going, I guess?
I guess what's happening is the money is looking for the most frictionless way to actually be productive. And so the reason DeFi is so interesting, instead of paying those crazy 200 basis to 2% fees that these wallets are charging, I don't need those guys for anything. Maybe I need a ramp to put my fiat into Ether or whatever, but after that, I don't need them. And I can go and do this for a fraction of those costs on a decentralized basis. What got me into this was we're always trying to find a place for our cash. When we haven't found an investment, we want some kind of yield on our cash. And right now we have a lot of cash because we sold a lot of commercial real estate just before the pandemic and during it, because I'm worried about what happens to all that office tower space. I'm not sure everybody's coming back the way they think. So one of the guys that works with Alex that runs O'Leary Ventures was one of our interns, heavy crypto. Eric's his name. I'm not going to tell you his second name so nobody bugs him. But he came to me and said, listen, you got a ton of cash here. Why don't we start a fund, a structured product that does exactly what we've been talking about? And I said, why is it going to be structured product? He said, because in the jurisdiction we're going to put the fund where you're going to invest the cash, they allow this. We don't allow it here in the US yet, but there's other jurisdictions like Switzerland and everywhere else. And you just report your gains to the IRS like you should any other asset. And he worked on it. He went way down the rabbit hole on it. And he's still working on it. It may still come to pass. But in the meantime, I said to him, Eric, why don't you and Alice go find me a company that's doing this already? I don't need to have a fund. I got the cash. Let's just buy the company and put our cash on the balance sheet. If we're a large enough shareholder, we won't care.
What to do in such a situation? Inform yourself and keep your financial education strong. We from the Compact Group offer our loyal subscribers a free educational portal with firsthand monetary, financial, and economic knowledge. Enter our invite-only Insider Club by clicking the link below. You will get access to first-class information far earlier than the rest. We have prepared a special deal for all our members where you can access a giant pool of Robert Kiyosaki's financial wisdom for just $1. To find out more, simply click the link below and join our Insider Club absolutely free. But there is more you can and should do. Build up several streams of income. More and more people realize that they have to take their future in their own hands, but they don't know how and where to start. We from Compact offer our Insider Club members unique opportunities. Strengthen your financial muscle and get the edge. Click the link below. Become part of our free Insider Club. No financial obligations. But there's one important thing you have to know. You have to become active. So do it now. Become active and see you on the other side.